You ever feel like you're just drowning in information? Trying to get a grip on something important, but there are just endless reports, data everywhere.
Yeah, like drinking from a fire hose.
Exactly. Well, that's where we come in. Consider this your shortcut to getting up to speed.
Uh-huh.
Today, we're doing a deep dive into Tata Motors Group, specifically their latest investor presentation.
Right, the one covering Q3 and the 9 months ending December 31st, 2024.
That's the one. We're looking at their performance.
And we've got quite a bit to go through. The main thing is the presentation itself. Financials, operations, future plans, all that.
Plus the visuals too, right? The branding, the vehicle images, it all adds context.
It does. It helps paint the full picture, market presence, strategy.
Okay, so our mission, let's call it that, is simple. Cut through the noise, pull out the crucial bits.
Yeah, give you a clear, concise understanding of where Tata Motors is now and where they're headed.
Perfect. So let's jump straight in. Finances. What really stood out to you from their overall performance?
Well, the first thing you notice is the revenue. Consolidated revenue from operations in Q3 FY25 was 113.6 KCR.
Okay, 113.6 KCR. How does that stack up?
It's a definite climb. Compare it to Q3 FY24, which was 110.6 KCR. And it's also a big jump from the previous quarter, Q2 FY25, which was 101.5 KCR.
So steady growth then. Seems like good momentum.
Definitely looks like it. That 113.6 KCR, it's about 2.7% growth year over year. Pretty solid considering, the global economy.
Yeah, definitely positive. And profitability. The presentation mentioned a reported EBITDA margin, 13.7% in Q3 FY25.
Right, 13.7%. That's a strong signal about their core operational profitability.
Okay, but reported EBITDA, what exactly are they counting in that? Sometimes the definitions vary.
Good point. They specifically mention it includes things like product development costs and the impact of their currency and commodity hedging.
Okay.
But importantly, it excludes certain things like gains or losses on financial instruments for debt hedging and revaluation of foreign debt. So it focuses more on the earnings from the main business itself.
Got it. That helps clarify. We also saw a PBT, profit before exceptional items, 7.7 KCR for the quarter.
Yes, and year to date, that figure is 22.3 KCR.
Wow, 22.3 KCR year to date. That's significant.
Absolutely. And that year-to-date number, it really shows this isn't just a one-quarter blip. It suggests a more sustained, strong performance over time.
Right, a pattern. Now, the presentation also touched on free cash flow for auto operations, 4.7 KCR in Q3 FY25.
Correct. And alongside that, net auto debt at 19.2 KCR.
Okay, how do we piece those two together? Free cash flow versus debt.
Well, think of free cash flow as, the actual cash the auto business generated after all its expenses and investments, money left over.
Available cash, essentially.
Exactly. So having positive free cash flow like that 4.7 KCR is healthy. It means they're generating more cash than they're spending in operations and investment.
Okay, and the debt, 19.2 KCR.
That's the total debt for the auto side, minus their cash on hand in that segment. It's a chunky number, no doubt. But the positive cash flow means they have the means to manage it, maybe even pay it down over time.
Makes sense. Okay, let's switch gears. How did the different parts of the business do? They break it down into automotive and others, right?
Yeah, and within automotive, you've got JLR, Jaguar Land Rover, and then the Tata Motors domestic business.
Which covers commercial vehicles, CV, and passenger vehicles, PV.
Exactly. Should we start with JLR? Their results are under IFRS, the international standards.
Sounds good. JLR highlights. What jumped out?
Well, product momentum seems strong. They unveiled the Jaguar Type 0 that got a lot of attention at Miami Art Week. Plus, they're almost finished testing the Range Rover Electric, and the regular Range Rover even won a Made in UK award.
So a mix of new stuff and reinforcing the classics.
Pretty much. Shows commitment to innovation, but also maintaining that brand prestige.
That Jaguar Type 00 reveal. Sounds like a big deal. The presentation mentioned huge opportunity C, lots of press, social media buzz.
Yeah, massive numbers.
Are they really trying to, reboot Jaguar? And is this buzz translating into actual customer interest? Not just clicks, but potential buyers.
That's the key question, isn't it? The sheer volume is impressive, but who is paying attention? They mentioned over 28,000 expressions of interest after the debut.
Okay, that's more tangible.
Right. It suggests genuine interest. And doing it at Miami Art Week, that hints at targeting maybe a younger, wealthier crowd. It fits with repositioning Jaguar as more exclusive, maybe a lower volume, higher price.
Interesting strategy. And what about actual sales volume for JLR? Wholesales.
Looking at wholesales, excluding the China JV, things look pretty good quarter on quarter. The UK was up 12%.
Okay.
North America jumped 17%.
Wow.
And Europe saw a 16% increase. So solid growth in key areas.
And that's mostly because supply chains are finally sorting themselves out.
That seems to be the main driver, yeah. Those disruptions hit everyone hard, so easing up helps clear the backlog. The question now is, can they keep it up with, potential economic headwinds?
Always the next challenge. What are the type of vehicles sold? The EV, hybrid, petrol mix?
Okay, looking at Q3 FY25, DVs and PHEVs, so fully electric and plug-in hybrids together, they made up 16% of wholesales.
16%.
Mild hybrids, MHEVs, were 20%, and traditional petrol diesel, ICE, was the rest, 64%.
How does that compare? Is the EV hybrid share growing fast?
It's fluctuated a bit. Q3 last year, BV PHEV was 12%. Then in Q2 this fiscal year, it actually spiked to 21% before settling back to 16% in Q3. So the trend is generally up, but maybe not a straight line.
Right. And China. Always a huge market. The presentation hinted at challenges there for JLR.
Yeah, China's still facing some macroeconomic headwinds, but JLR says their import business there has been resilient, actually doing better than the premium market average year to date.
That's something.
And looking forward, their big China play seems to be licensing the Freelander brand to their joint venture.
Reviving Freelander.
Interesting.
Yeah, but specifically for new energy vehicles, BEVs and PHEVs. The first locally made Freelander NEV is planned for mid-2026. It's a clear move to tap into that massive NEV growth in China.
Makes strategic sense. Okay, let's move over to the domestic side. Tata Commercial Vehicles, Tata CV. How did they do in Q3?
Well, for Tata CV, overall volumes were down slightly year over year by 1% in Q3 FY25.
Down 1%.
But, and this is important, they stressed it was an improvement from the previous quarter, Q2, where volumes were down a much steeper 19%.
So the decline is slowing, moving in the right direction at least.
Seems that way. Not positive growth yet year on year, but definitely a better trend.
And within CV, did some areas do better than others?
Yes, definitely. They highlighted heavy commercial vehicles, HCV, the intermediate light and medium ones, ILMCV, and passenger carriers. So they all did better than the industry average in Q3.
Any standout numbers?
Passenger carriers grew by an impressive 30%, ILMCV was up 3%, and medium commercial vehicles, MCV, also had double-digit growth. So strength in specific spots. Got it. The presentation also mentioned digital sales growing for CVs and lots of new products.
Right. Digital contribution to retail sales hit about 24% in Q3. That's pretty significant.
Yeah.
And they launched over 50 new products or variants in the quarter. That's a lot of activity, suggests a big push on innovation. Plus, they mentioned cost-cutting efforts help their margins in CV.
Okay. What about their electric CVs? The buses and stuff under TML Smart City Mobility Solutions.
They've been busy there. Their e-bus fleet has now covered over 260 million kilometers.
Wow.
With really high uptime, over 95%. They're still deploying buses for that big CESL tender, over 2,400 e-buses running in cities like Delhi, Bangalore.
And new contracts, too.
Yep, secured another 148 buses for BMTC recently. And the Ace EV, their small electric commercial vehicle, over 7,200 are out there now, racking up miles. They've added more corporate clients, too, so it seems to be catching on for last-mile delivery.
Good progress on the EV front. And environmentally, that zero waste to landfill certification for the Lucknow plant is notable.
Definitely a good sustainability marker.
What's the general feel for the CV market overall? Freight rates, transporter mood?
The presentation noted freight rates improved in Q3, which is typical for the season. Transporter profits were up slightly thanks to better vehicle use. And customer sentiment was generally positive, helped by a decent monsoon, apparently. Commodity prices were stable, too, which helps on the cost side.
Okay, good context. Now let's look at the other domestic pillar. Tata passenger vehicles, Tata PV. What were the big industry trends in Q3?
Well, the big story in the Indian PV market was SUVs. Their market share surged year over year to 54%.
54%, mostly taking share from
Hatchbacks and sedans, mainly. Overall, PV demand picked up in Q3. Registrations grew 8%. That was driven by the festival season in October and the usual year-end push in December.
Right.
The industry also managed to bring down dealer inventory levels quite a bit.
That's good for dealers.
It is, but it came with higher discounts, so a trade-off there. And EVs, still growing strong.
Okay, so within that market, how did Tata PV perform?
Very well, it seems. They had a record calendar year in 2024 for sales, and they hit their highest ever registrations in Q3 FY25.
Highest ever, despite the market shifts.
Yep. They also cut their own dealer inventory way down below 25 days, which shows good management. And crucially, they held on to their #1 spot in the EV segment.
Still leading the EV charge then.
Yes, highest ever EV registrations for them personally, even with more competition entering the space. And their Punch model. It was the top-selling car model in the entire industry for CY24 and year-to-date FY25.
The Punch. Wow, that's huge.
A real standout performer for them.
Okay, so very strong showing for PV. Now, looking ahead, investment and outlook. They spent 2.0 KCR in Q3.
Yeah, 2.0 KCR investment spending in Q3 FY25.
And where's that money going? Mostly tech.
Primarily, yes. Focused on developing new technologies and advanced powertrains, it lines up with the big industry shift towards EVs and more sophisticated tech in cars. Consistent investment is key for them long term.
Makes sense. And their forecast for the next quarter, Q4 FY25.
They're expecting quarter-on-quarter growth in wholesales.
Growth. Why?
Mostly seasonal strength. Q4 is often strong, plus ongoing government spending on infrastructure projects, which helps demand, especially for CVs. They seem pretty positive about most end-use sectors.
Okay. The presentation also listed key priorities for JLR, CV, and PV going forward. Any highlights?
Sure. For JLR, big focus on stimulating demand, obviously, but also a major goal, becoming net debt-free.
Net debt-free. That's ambitious.
It is. Plus, enhancing the luxury experience, especially for flagships and launching those new BEVs successfully.
And for the domestic businesses, CV and PV.
For Tata CV, it's about gaining market share and improving profitability realizations, they call it, pushing innovation, service quality, continuing the EV momentum, and cutting cost.
Standard stuff, but important. PV.
Tata PV aims to grow market share further, using their multi-powertrain strategy, petrol, diesel, CNG, EV. Strengthening the dealer network is also key, and continuing to push EVs into the mainstream.
Got it. It also mentioned Investor Days planned for June 2025, one for TML India, one for JLR.
Yeah, tentatively scheduled. That suggests we'll probably get a much deeper look at their long-term strategies and financial targets around then.
Separate days for India and JLR underlines their distinct paths, I suppose.
Exactly. Shows they're managing them with specific focuses.
There were also some extra financial details just for the domestic business working capital investment breakdown. Anything jump out there?
Well, the working capital snapshot gives a glimpse into their short-term efficiency, managing day-to-day cash flows, and the investment breakdown of that Euro 2.0 KCR shows how much went into R&D versus other capital spending and splits it between PV, EV combined, and CV.
So more detail on where the future investment is going.
Precisely. Helps investors see the allocation towards growth and tech in each segment.
Okay, finally, the presentation wrapped up with the consolidated group financials for Q3 FY25 comparing to last year. What's the big picture from those combined numbers?
The consolidated results really pull everything together and confirm the positive trend we've seen. Group revenue from operations hit ever 113,575 CR.
That's up quite a bit from last year's Q3.
Significantly, Q3 FY24 was 81,264 CR, so a big jump.
Wow. And profits. EBIT.
Also strong increases. EBITDA was 15,521 CR, up from 12,326 CR. EBIT improved to 10,083 CR from 9,165 CR. Profit after tax was also up nicely.
So the overall group picture is pretty healthy then, driven by both JLR's recovery and the domestic strength.
That's the takeaway. Yes, strong performance across the board, pulling the consolidated numbers up significantly year on year.
Okay, so let's try to wrap up this deep dive. It feels like Tata Motors Group is, well, it's a mixed bag, but leaning positive, wouldn't you say?
I think that's fair. You've got the strong JLR wholesale recovery, which is great news.
Right, and the really impressive Tata PV registrations, plus their continued dominance in the EV space in India.
Definitely key strengths. But as we discussed, there are still challenges. The China market for JLR remains tricky.
Yeah, headwinds there. And they're still working on that net auto debt figure.
Exactly. It's not insignificant, so strengths and areas to watch.
But digging into this presentation, it really does give you a good, quick grasp of what's driving them right now and what their priorities are.
It does. You get the big group picture, but also the important details for JLR, CV, and PV. A really useful snapshot.
Okay, so here's a final thought for you, the listener, to mull over. We see Tata Motors pushing hard on EVs, from luxury Jaguar all the way to the mass market Tata PVs. And they're making these strategic moves in China with Freelander. What could the long-term ripple effects be? Not just for Tata Motors, but maybe for the whole global auto industry. Think about that interplay. The fast tech changes, shifting markets, financial performance. How does that ultimately shape where Tata Motors lands in the years ahead?
Definitely something to keep an eye on.